Thank you, and good afternoon. My name is Darren Lebrenz. I'm President and CEO of Pure Gold Mining, and today I'm here to introduce you to our Red Lake mine. Uh, on the screen in front of you, you've got a stylized Canadian flag depicted with maple leaves, and really that's a very deliberate call to our location, being in Canada. And that's one of the themes that I'll weave through this presentation. I want to talk a little bit about jurisdiction. I want to talk about grade, what it means to be high grade. We'll discuss size, and importantly, we're going to talk about growth potential. We are in construction today. We're targeting first gold pour in the next several months, and we will be the next mine in Canada. In production, we'll be the 5th highest grade mine in Canada and the 17th highest grade mine on the planet, which puts us in about the 95th percentile. We've come through a period of incredible margin expansion. So let's talk a little bit about jurisdiction to start. We are located, as I said, in Red Lake, Ontario, which is a region that has about 100 years of continuous gold mining activity. It is the primary industry for the area, and so from a location perspective, both on the geographic jurisdiction and the geologic endowment, if you will, jurisdiction, there really is no better place to be building a mine. When you look more broadly at Canada, it's a very strong regulatory environment. It's a long history of mining. It is well understood, and there's virtually no geopolitical risks. So again, from a jurisdiction perspective, it's a really strong market to be building a mine. But importantly, when we look at the gold market today, we've been seeing some very clear, strong market dynamics for gold over the last year, and in fact beyond. Both short-term and long-term drivers are very, very fundamentally positive for gold right now. We've seen declining interest rates over some time, central bank buying, and then more recently, the amount of stimulus that's gone in the market really is driving gold prices in a very positive direction. Last time we were at these levels, approaching $1,900 an ounce, which is an all-time high. Back in 2011, the Canadian dollar was on par with the US dollar. And so, the record gold price in Canadian dollar terms at the time was around $1,900. Today, we're sitting just at $2,500 an ounce Canadian, and so we've seen a real decoupling of the Canadian US dollar, and that's it's a huge benefit to our operation. And I think we're perfectly timed to the market here with first production targeted for late Q4 this year. All of our costs are effectively in Canadian dollars, yet our revenue is denominated in US dollars. So that margin expansion over the last year has been absolutely incredible. So with that, we'll dive right in. I do want to caution that I will be making forward-looking statements. For more information, please visit our website, www.puregoldmining.ca, and you'll find our technical report therein. As I indicated, we are on plan. We are targeting first gold before Christmas this year. What you're looking at here is a picture of our processing plant, and that's one of the benefits of our project. It is a historic site that has significant infrastructure in place. We have a existing underground access. We are mining today at about 250 meters below surface. This will be an underground mine. We have a processing plant, which you're looking front here, and we're doing significant work inside of this mill to effectively replace all the equipment with new equipment, maximizing mill availability, maximizing recovery, and at the end of the day, maximizing our throughput and cash flow. Before we jump into the project, I do want to talk a little bit about the team. And, obviously the team is very critical to the success of our company. One of the keys here is Red Lake experience. And so for myself, I'm a geologist. I've worked about 30 years in this industry. About half of my career was spent with a senior producing company where I was initially started in exploration, but quickly moved into operations, operating mines in both open pit and underground environments across the world. I did spend some time in the Red Lake area. I was chief geologist for what was known as the Campbell Mine, which was really the revenue generator for this company, Placer Dome, in the mid-1990s. And that's a theme that resonates across the board and executive management team. We have 6 of us who really started our careers and cut our teeth, if you will, in the Red Lake camp. You can see over 135 years of experience in Red Lake, and over 10 projects that we've moved significantly forward over that period. At site, as we transition through development and towards production, we've been building out our operations team. We do have our entire operational management team in place, and we've got about approximately 100 employees on our way to about 260 as a life of mine average. And that encompasses everybody from the right at the face underground mining the rock through supervision, maintenance, administration, security, and to the mill itself. We did a bit of a poll just to speak to the operational or depth of operational experience within our group, and asked where we've had a key role in operating mines. And there's a broad list on the screen right now, 68 different mines across the world that we've operated. I think it comes across pretty strongly in a graphic representation. So what we're looking at here is in green, 64 deposits that we've discovered and brought towards the development stage. We've got 33 mines that our group have built, and 68 mines that we've operated. So there's a very strong track record across the board, management and operational team in discovering, building mines, and building companies. So let's step into Red Lake. This photo was taken near the airport in Red Lake. It is a community of about 4,500 individuals, and you can see provincial highways running through the area here. It's very well located from an infrastructure perspective, and you follow this road about 15 miles and you're at our front gate. Obviously grid power to site, and with 100 years of mining history, it's an area that has a very strong pool of skilled labor, a strong knowledge of underground mining, and if you don't actually work for one of the mines in the area, you're effectively working for a service industry that supports the mine. And so from the perspective of both building an operation and operating, it gives us a strong advantage in terms of the capacity there to both supply employees, and services. In the background here, what we're looking at is a couple head frames and a milling facility. This is part of the Campbell mine, where I worked in the mid-1990s. It's part of the broader Red Lake mine complex. And that mine's been in continuous operation since the late 1940s. To date, it's produced 25 million ounces of gold. And so it's clearly a world-class deposit. Most of these deposits, and they're around the world, there was a collection of deposits that were formed about 2.7 billion years ago. And I only mention that because they share attributes, again, across the world. They're often underground mines. They're generally quite high grade. And importantly, they usually start near surface and they go on forever. And so very deep roots. And so again, when we look at the Red Lake mine here in the background, in 1940, that started as an exploration staff at surface. And today, fast forward 75 years, they're mining at a depth of 2.5 kilometers below surface, and it's still going. And that's something to bear in mind as we start talking about our own project, where our resources and reserves are really captured in the top kilometer. We think there's a lot of potential to continue to expand to depth. So as a geologist, I'd be remiss if I didn't show a geological map, but I'll save you from any kind of detailed explanation about what's going on this map. What I do want to highlight is there's really two criteria that defines where you want to be in the Red Lake camp, if you will. And those are, you want to be in what's known as the green rocks here. These are chemically reactive, they're mechanically reactive, and of the 30 million ounces of gold that's been produced, it's virtually all come from the green rocks. The other key criteria is you want to be next to the contact between the green and the yellow. Effectively, those two groups collided together. There's a big fault system that's formed, and that crack, if you will, is the plumbing system for large deposits. And so we've highlighted two key corridors here, one to the north, that's the Red Lake mine trend, and one to the south, it's our own Pure Gold mine trend. When you look at the production in the camp, 30 million ounces, effectively 95% came from those two corridors. The northern camp is owned by Evolution Mining now. They bought it from Newmont Goldcorp last year. It closed earlier this year. They paid effectively $700 million for that acquisition, for a deposit that's had a 75-year mine life, reserves that are about 5 years out, and it's very deep. On our own side, we've got 2.5 million ounces of historical production. And today we have a resource of 2.1 million ounces at 9 grams per ton, additional 500,000 ounces of inferred at 8 grams per ton. And out of that, we took a portion of the mineral resource and we built a mineable reserve of 1 million ounces at 9 grams per ton. So let's compare and contrast the two trends, if you will. We've already noted that they share the same geology, the same rocks, the same structure. In the next image here, what I'm showing is a cutaway, so basically cutting through the earth, showing the two side by side. On the right, again, we have the Red Lake Mine Complex. You can see there's 4 shafts there, starts at surface and goes down to a depth of 2.5 kilometers. Clearly, it didn't start that way, but evolved over time. On our own side, what we see here is similar scale, a similar scale as we move across from left to right. But these resources and reserves, again, are in the first kilometer. And so we start at surface, we go to a depth of about 1 kilometer below surface, and that's the extent of what we've defined to date. We do, however, have a very deep drill hole here at 2 kilometers below surface that hit the deposit. It returned 14.3 grams per ton over 2 meters. Importantly, it's the same geology, as we would say, the same alteration, the same structure, the same mineralization as what we mined in our test mining program at 150 meters below surface. And so that gives us, a high degree of confidence of the potential of our deposit to continue to persist to depth, much like we see at the Red Lake mine on the right side. The real difference between these two, when you look at it, is 30 years of mining. If you strip away 30 years of mining on the Red Lake mine complex, it would look identical to what we're showing at our own Pure Gold trend. Before I step away, I do also want to highlight the deepest part of the mine here at the Red Lake mine, which I'm highlighting, this narrow appendage that runs down. That's known as the high-grade zone. The high-grade zone was discovered in kind of late 1990s, around the time that I was at the Campbell mine, part of this mine. And it's an interesting discovery. It was discovered after 50 years of mining, right in the heart of the deposit, but it was transformational. At that time, that half of the deposit was being mined by Goldcorp, which was founded by Rob McEwen. They were actually in the midst of a unionized strike at the time, and he took the opportunity to explore. They discovered the high-grade zone, and it was a explosive transformation for Goldcorp. It effectively took the mine from 50,000 ounces of production at about 7 grams per ton to 550,000 ounces of production at 77 grams per ton. Turned this deposit into what was known as the richest gold mine in the world, and it turned Goldcorp into a company that was worth a couple $100 million at the time to, at its peak, a $45 billion US company. Really was out of that one discovery. And so that's the explosive kind of growth that we're really excited about, that we see at Red Lake. And I'll talk a little bit more about that as we move through this presentation. I will highlight that right here at about the similar depth, we have what we call the 8 zone. It is our high-grade zone. It shares the same geological environment as the high-grade zone to the right. And to date, it runs about 3 to 4 times the average grade of our reserves. And it's completely open for expansion. And so it's something that we're extremely excited about. So now we shift across to plan. What we're looking at here is a plan map of our mineral deposit. We've projected everything to surface. And if we touch on scale first, what I'm showing here is a mineralized system that runs from the south end of our wedge zone to the north end. It's 7 kilometers long. So a very big mineral system in place here. We've color-coded it by phase, if you will. The red or dark red color is the phase 1 mine plan. So when I mentioned earlier that we took a portion of our mineral resource and put it through a feasibility study and built a reserve, that's the location of it. We have 1 million ounce reserves in there. It's at 9 grams per ton. The lighter red color, the pink, if you will, is mineral resources that we've defined, that we've done early stage engineering work, but that wasn't part of our feasibility study. And we're calling that phase 2. We continue to aggressively explore those areas, looking to expand them. And ultimately, our goal here is to build a mine plan, incorporate it as part of the broader mine plan, and potentially through an expansion of the plant to have an impact on both the production profile and the cash flow moving forward. So we very much view this as a scalable asset and have taken a phased approach to developing it out. I want to touch on grade. In the fork zone, wedge zone, rusted south zone, these all sit at surface. We've defined them down to 300 to 500 meters below surface. They are open, and we continue to drill with 2 rigs active today on the wedge zone. And you can see some of the drill hole intercepts in there, very high grade in their own right. But let's look at the 8 zone for a moment. The 8 zone sits right here as part of our phase 1 mine plan. And I'll just call out a couple of the grades there from drill hole intercepts: 4.3 meters at 466, 5.5 at 340. These include smaller subintervals that run into the thousands of grams per ton. So clearly it's different. It's very high grade and has the potential to significantly impact the cash flow, obviously, when we're in production, and the future of our operation as we continue to look to grow those resources and reserves. When we talk about defining an underground deposit, one of the keys to getting it right is having enough information to validate your geologic model and validate the resource estimate that guides the operating mine plan. And so in our case, we've got 1,300 kilometers of drilling, 1.3 million meters of drilling. And if you think about that for a moment, it's just an incredible amount of of work that's gone into defining that resource. To replace that drilling today would cost about $260 million. So obviously we benefit from significant historical information, and we put in about 350,000 meters of drilling over the last 3 years to define this resource. Within the phase 1 mine plan, we have an average spacing of about 6.5 meters between drill holes. And so again, from a risk perspective, that's absolutely incredible, the density. It means that you're never farther away at that depth. We're still half a kilometer higher depth than the Red Lake mine to the north of us. Moving to the left, what we show here is the 8 zone. This is our high grade zone, and you can see again that it's wide open, both up and down plunge. Further left, we have the fork zone and the wedge zone. They start at surface. You can see they're defined down to about 300 meters depth, and they're completely open for expansion. So how does this look as it gets borne out with more drilling? Well, that's shown on the screen here. We effectively think that our key part of our phase 1 mine plan is going to continue to plunge downwards towards this 14.3 grams per ton, much like deposits of this class. The 8 zone, our high grade zone, is completely wide open, both down plunge and back up towards surface, where we have our rusted south zone. Moving to the left, fork zone and wedge zone, again wide open. We continue to drill in those areas, and they plunge off in the other orientation, which is really just a geometric relationship between the structure and the rocks that host the gold. So to that end, we have launched a very aggressive exploration program. We've got about 30,000 meters of drilling planned between now and the end of February next year. Ultimately, this program will grow to about 50,000 meters. And really, there's 3 goals of the work. One is to convert resources to reserves within the footprint of our phase 1 mine plan. 2 is really looking to grow those high-degree discoveries and potentially incorporate them into an expanded mine plan. And 3, obviously, we're looking to expand and discover additional high-grade zones, much like the 8th zone, which has an opportunity to be a real transformational company maker, if you will. So look at the numbers from the phase 1 mine plan, and I do want to highlight that these are currently out of date. They're out of date for a couple of reasons. One, you can see that these are at $1,500 per ounce, or about 2,000 Canadian dollars per ounce. Today we're at 2,500 Canadian dollars per ounce, and so we're about $500 an ounce above these numbers, which on a million ounce reserves alone translates into $500 million of cash flow. So we've gone through a period of incredible margin expansion. But before we dive into the rest of the numbers, I'll just touch on some of the work that's happening on the ground. We've got underground development. This started actually about 2 years ago, with test mining that was conducted from our existing ramp, which brings us from surface down to about 250 meters depth today. And that test mining went into a couple different mining areas, and the purpose of that was to get a sense of ground conditions, what the deposit looked like visually, and importantly, how it reconciled against our geological model. And it reconciled beautifully. We came in within 1% on tons. We actually achieved 15% higher grade in the mining, so overall we had about 13% more ounces in the 2 areas that we had targeted for test mining. We also, in the active test mining, we're testing the hanging wall and footwall, so drilling off to the walls, and we targeted a lower grade zone from our model. And with closer space drilling, it came in higher grade, so we ended up extracting more material, partially mined that area, and all in, we pulled out 55% more ounces out of that test mining area based on that discovery. And so that was a very strong reconciliation and highlights some of the opportunities that we think we'll see in mining of our phase 1 mine plan. That underground development has continued to date. We've put in about 2,000 meters of underground development. And importantly, we're about 60% better than our mine plan from the feasibility study. So what I mean by that is we're actually advancing faster than we had projected. And that has a couple of important outcomes. One, you're doing more work with less time, so you're going to spend less money life of mine if you can maintain that. And so from a capital perspective, that's really important. But equally important, if not more important, we're opening up the deposit quicker. And so that means that when we turn the mill on in December, we'll have more areas to select from. We can prioritize on higher grade and maximize cash flow up front. Longer term, when you think about the 8 zone sitting at about 800 meters below surface, we think we can get there faster. And that has, again, really important outcome in that about a year out from today, we'll be set up underground, we'll start drilling that, we'll be looking to expand that high-grade zone. And then ultimately, we think we can bring cash flow forward by about 2 years from that. And you'll see in the next slide what impact that can have. On surface, I mentioned we have existing infrastructure. To date, we put in a new administration complex and we've occupied that. We've got a new warehouse in place. I've got a new mine dry. This is an area where the miners go to get changed to go underground. So that's in place. We're building out a water treatment plant right now, which will treat water before discharge to the environment. And within our mill, we've done significant work taking out the old ball mill, all the piping, pumps, motors, and we're starting to construct new equipment so that at the end of the day, it'll be effectively new mill with additions to the grinding circuit, a gravity circuit that will take advantage of the strong free gold that we see in our deposit, new thickener, new gold room, new bash plant to supply tails to the underground, and a cyanide detoxification. All of that is very well advanced. So stepping back to the numbers, I will give you a sense of what it looks like today. So revenue today would be $2.5 billion. Our internal rate of return is about 60%. After-tax free cash flow is somewhere between 850 and 900 million. After-tax net present value is north of 600 million, and really that's driven by grade. As I highlighted earlier, we'll be in the 95th percentile worldwide by grade, which means on a per ounce basis, our costs are quite low, with projected all-in costs of $787 per ounce. That means we're looking at a margin today of about $950 an ounce, which in any business is an incredible margin for operations. And so we again feel like we're very well timed to deliver our phase 1 mine into the market. So this is a cash flow from the phase 1 mine, and it's color coded by metal price, if you will, and gray takes you up to today's metal price. And so you can see very strong cash flow here in year 5 and 6. And that's when we're touching the 8 zone. That's the impact of that high grade zone. And so what I indicated earlier about faster development, we think that we can bring year 5 forward into year 3. And so really pushing this cash flow to the left-hand side of the curve. Longer term, this gray dashed line is meant to depict the way we see this asset developing. In other words, I mentioned we have resources in Fork Zone, Wedge Zone, Russet South Zone. We are drilling today. We're looking to expand those resources. We've actually done early engineering. We've looked at how they would be mined, what kind of productivity we could get, what the capital would be. And our goal here is, year 3 of operation, we start mining from those centers concurrently with the phase 1 mine, and we look at plant expansion. And so that's showing here as a dip in capital in cash flow, in year 2 as we start building out those mining centers, and then we push the production profile and cash flow upward. And longer term, my belief is this carries on for far longer than the 12 years outlined in our phase 1 mine plan. And that really is expanding those deposits to depth. Bear in mind again that we've defined resource and reserves down to 1 kilometer. We have a pierce point at 2 kilometers, and like our companion deposit to the north of us, we certainly feel that this will persist to depth and carry out for a long time beyond the 12-year mine plan. So we think we're barely scratching the surface, and this reference actually also ties into where value creation has come in our sector over the last 20 years. I talked about the high-grade zone at the Red Lake mine and how that impacted Goldcorp and built them into one of the largest producing companies in the world. More recently, you can look at Kirkland Lake Gold, which I know made the rounds in London, years back as a struggling company with the Macassa mine. Subsequent to that, they discovered the SMC zone deep down. It's a high-grade zone. They acquired the Fosterville mine in Australia, which historically produced about 30,000 ounces a year. Last year, they produced 620,000 ounces after discovering the Swan Zone, another deeper high-grade zone. And today, you're looking at market cap of about $17 billion for Kirkland Lake Gold. So that kind of transformative discovery potential is something that we've seen repeat itself. And clearly with the 8 zone at our own property, it's an opportunity to look for that similar kind of explosive discovery. That's what drove 2 of the key shareholders on there. In fact, all 4 of them to invest in Pure Gold. Collectively, this group holds 35%. Rob McEwen, founder of Goldcorp, obviously made his name and wealth in the Red Lake camp, and he was the lead investor when we acquired this asset. Eric Sprott was chairman of Kirkland Lake Gold. He put in $20 million last year to help us build the mine. Recently, he approached us and said, you know what, this really reminds me of the discoveries at Kirkland Lake and the high-grade zone. I want to put more money to work and drive exploration and growth. And to that end, he backstopped a $15 million raise that we completed this being earmarked entirely to exploration. Newmont is the #1 gold producer. They're a 3 to 5% shareholder. And then AngloGold Ashanti, we are, I think we're their top investment that they hold. They hold about 15%. They recently increased their ownership. And with them looking to diversify out of South Africa, I certainly wouldn't discount their important ownership of Pure Gold Mining. So again, collectively about 35% ownership in these 4 visionaries. We are fully funded. We're funded through to production and through our working capital period. We've got about $40 million as we reach completion, of which $15 million is earmarked to exploration. So that leaves about $25 million as a working capital buffer, which will clearly carry us through commercial production in Q1 next year and into positive cash flow.